Hello, I'm Victoria Fritz. Let's take a look how markets across Europe have ended the trading week, because the Bank of Japan really stunned markets today by expanding its stimulus program, and that sent stocks up nearly 5% across in Japan. You can see the Nikkei there at the bottom, and that really set the tone for financial markets across Europe and the start of trade in America. You can see the Dow there up almost 1% at the moment. Now, of course, this is just days after the Federal Reserve, the US central bank, wound down its own package of economic incentives, and the FTSE, well, that closed up almost 1% at the end of the week. Helping in that rise for the index were bank stocks, because it was an extraordinary afternoon for investors in British banks, because the numbers really do speak for themselves. You can see them there. Now, Barclays up almost 9% at the end of the day. Why? Well, the Bank of England set out new proposed rules on the acceptable base level for financial health of our banks, and although the standard is higher than the proposed global standards, the latest from them, well, the banks have a little bit longer than anticipated to meet those demands. So shares in Barclays, thought to be most at risk, well, they shot up, and others really followed suit. You can see them on the board. Now, that is, of course, despite news that major banks, including RBS, you can see it at the bottom there, well, they are boosting their collective war chest to $6.5 billion. That's banks across the world. That is to settle, of course, allegations of collusion and manipulation in the foreign exchange markets. Let's speak now to Anne Richards. She's the Chief Investment Officer at Aberdeen Asset Management, and she joins us now from Edinburgh. Thank you very much for joining us, Anne. Let's start with the banks. Banking stocks really on the rise today. Would it be fair to say this is a little bit of a welcome relief rally?
It definitely is a relief rally. I mean, what the regulator has essentially said today is that the amount of shareholder funds that banks have to hold as a proportion of the total assets that they have, that's things like the loans they give out to you and me, is not quite as high as some people thought it might have to be. Plus, they've got a little bit longer to raise that capital if they don't quite reach that level. So definitely it's taken away some uncertainty from the banking stocks, which have been under pressure, as we all know, for some time.
They have indeed. Now, the global inquiry into currency rate rigging, well, it's been going on for more than a year across the world. The fact that banks are putting together a lot more money and coming to the markets and saying that they have set this aside, does that sound to you like we're close to a conclusion on that inquiry?
I think we're all hopeful that we're nearer the end than the beginning of it, but it's clearly been a major and problematic area for the banks, and they've got some experience now of rummaging around and trying to figure out what's going on in some of these less salubrious areas of operation that they've been active in over the years.
No, they certainly do. Now, how does this compare, this currency rate rigging, how does that compare to scandals like PPI mis-selling and LIBOR in terms of scale?
I think it's probably closest to LIBOR in terms of the type of activity that's been involved, and it's too early to say exactly what the comparative numbers will be, but our best guess is that it will be roughly proportionate. I mean, there's similar scale of wrongdoing that has been identified.
Looking at the global markets, FTSE up almost 1%. You can see the Nikkei up 5% at the end of trade last night. Just as we've got one economic stimulus program coming to an end in the US, it looks like another one has been given another lease of life, and I suppose that's what's been boosting the global markets today.
Yeah, absolutely. I mean, you've got both Japan and actually the EU, the ECB, much more inclined to be putting liquidity into the market, just as the Fed is removing it from the US market. So it's almost as if the baton has been passed from one to the other in the relay of global QE.
Now, it has been, of course, quite a week. We've seen the end of quantitative easing in the United States, but no sort of shock, I guess, to see the markets really wobble. But they seem to be sort of still concerns that we've had a month ago when we saw the huge swings, huge volatility in the markets. Why haven't we seen a big drop yet? Because those stabilizers have come off.
I think it's to the point that you just made around Japan and the ECB. In fact, I think although we're seeing the US continue to perform well, and thus the Fed backing away from that unconventional policy, which we've all been benefiting from. We've got another source of liquidity coming into the market with QE, and markets like that, they find that supportive. So I think pushing some of the interest rate rises out a little bit further, possibly in the US and almost certainly in the UK, combined with more QE, just gives the markets confidence that there's not going to be a liquidity crunch coming up.
So Anne Richards of Aberdeen Asset Management, thank you very much for your time. Let's check back in with those markets. Well, trade is still underway in the United States, and we've had fresh data this afternoon that showed consumer spending in the States is falling for the first time in 8 months. But traders are predicting that the slowdown there is likely to be temporary, because we had other sources showing us that wages are rising at their fastest pace in more than 6 years. And on the corporate front, things are still strong, and we've seen 3/4 of all companies listed on the S&P 500 reporting earnings actually above analyst expectations. That's it from me. Have a wonderful weekend.